Good morning, one and all, and welcome to this morning's video. So this morning I have two pairs on watch, and those are CAD Yen and Swiss Yen. So my favorite of the bunch, for a multitude of reasons, is CAD Yen. And if we just zoom out to the weekly, you can see that we have this structure here. We have this structure here. 1, 2, 3. We fail to commit to the downside. Then we push to the upside, and then we break above all of these highs here, and then we completely smash to the downside. Okay, so we are now trading back below. We're trading back below all of these highs here. Okay, and I'm just seeing this as an impulse correction continuation to push lower, potentially to take out that low there, because if we measure this impulse and we assume that let's get that a little bit more accurate. We assume that the second leg is of a similar length. So if we get an impulse correction continuation, that would take us down to that area. But certainly as a solid higher time frame target, we could be targeting that low there, that this low near miss too. Okay, often these often these lows are these near misses are an indication of where the liquidity is sat, because they will often near miss to an area of liquidity. Okay, so on the higher time frames, you can see that we have this. So previously I was looking for trades down here, didn't manage to get any. But what we have now is we have this 1, 2, 3, this expansion in price, okay, leading up to what is more or less the retest of the back end of this. And if we just drill down a little bit, we can also see that we have, okay, I've got those doodles on the chart. Let's get them off. We also have a sharp area. I've talked about how the sharp areas are often where the liquidity is sat, and you can see we have a very sharp move there. Okay, the sharp move, try that again. We have a sharp move there which caused a big run off to the downside, and there was enough of an exchange of liquidity there to cause price to smash through all of this volume. Okay, it completely smashed through all of that. So there must be, by definition, a lot of liquidity there, and the clue that we may be getting that that's the case is the fact that we have a 1, 2, this expansion that I was talking about leading into that area, where we keep near missing that area. Okay, so that's giving me a clue that that might be where the liquidity is sat, especially when it's pretty much the retest of the back end of this as well. Okay, it does look quite far away at the minute, and I am mindful of the fact that we could end up getting something like this. We may start to sell off, we then see something like that, and then we get a little ending structure leading into that, which could happen. But one of the things I do know is that these structures, when we do have a clear 1, 2, 3 leading into a hook point like that, especially with these structures, the last leg can have momentum. Okay, so we may get here a little bit more quickly than we otherwise might have done, especially when we've got CPI coming out of the United States this afternoon, which may act as the catalyst to get price up to that area. Okay, so I'm factoring in all of these things. I'm also factoring in, if we just zoom back out to the 4-hour, I'm factoring in things like, for example, if we just measure this, we measure that pullback to that area would be about 40%. So we would have pulled back about 40% of that. So that would be a healthy pullback. This is more prevalent on Swiss Yen. I think it's a 50% pullback. But regardless, what I'll be looking for today, it's pretty clear as setups go. So what I'll be looking for in this instance, these really are my go-to setups. As I said a couple of weeks ago, I was selecting my pairs for the following week, and I was asking myself, what are my strengths and weaknesses? And one thing that I concluded after a little bit of chart work was one of my strengths is being able to spot these 1, 2, 3s leading into a hook point. My mind naturally gravitates to seeing these on all time frames in all scenarios more than it does anything else that I've learned to see. So what I'm trying to do is double down on these entries, because even when they're poorly positioned, not that I would take trades in poorly positioned areas, but even when they're poorly positioned, when you get these 1, 2, 3s leading into a hook point, you tend to get enough liquidity come in your forecasted direction for you to be able to get your risk off of the table pretty quickly. Okay, if they are poorly positioned, they tend not to play out after that, but This is one thing I noticed. But anyway, what I'll be looking for from this pair is a tap into the area of value that we keep near missing to, a push back down below the area of interest. And in this instance, just because of how much scope we've got to play with, I will be looking to hold this all the way down to here. Okay, I'll be managing this a little bit more loosely. And if we just measure the range just above the 90% area where I would normally set a take profit, we have that sharp move there. So what I would do in this instance is I would set a take profit there, okay, and I would trail my stop loss accordingly. But as I said, I would give this a lot of room to breathe because I think this has got a lot of potential. This one there would be your solid first target, something in the region of just under 5%. And of course, my minimum threshold for setting take profits is 5%. So I wouldn't set a take profit there. So that's what I'm looking for from CAD yen. And we shall see if that alert triggers by the end of the day. As I said, we may get a little ending structure that I just illustrated a minute ago. We shall see. Okay, so it's going to be a pretty similar deal with Swiss yen. Okay, so Swiss yen is in this kind of all-time high territory. Okay, as you can see there. But one thing we did have is with that solid monthly, which just completely smashed back below these lows. Okay, and this to me at the moment is just looking like, Swiss yen can behave a little bit. It's got a bit of a mind of its own to some extent, but this to me just looks like an impulse correction continuation to push lower to potentially take us into the base of all of this consolidation there. Okay, and then what happens there after that remains to be seen. Okay, you can see that we also have the kind of head and shoulders element to it. So we have the left shoulder, head, right shoulder, where the amount of volume here is kind of similar to what we had here. Okay, I'm also factoring in things like that when we get a head and shoulders pattern, the right shoulder tends to protrude slightly higher than the left before it plays out. Often it will equal, but a lot of the time it will protrude slightly higher than the right and than the left shoulder before playing out in the forecasted direction. Okay, and then as I drill down, we also have that element once again of that 1, 2, 3 expanding pattern. Okay, momentum coming in at the area of value. We're also to some extent kind of retesting the back end of all of this volume. I'm factoring in things like that. I'm factoring in things like this pullback, I believe, is about almost bang on 50%. So that would be a healthy pullback. Okay, and I would expect slightly deeper pullbacks on Swiss pairs. Okay, I've noticed with some of the more corrective pairs that they tend to pull back up to about 60% of the length of a move before committing in the forecasted direction, as opposed to a maximum of like 50% on the less corrective pairs. You can see that we're wicking to that area. That doesn't surprise me. One of the reasons I said on CAD yen that we might get a little ending structure, so something like that, is because what you've got to remember about the reason we tend to see these in these massive structures like this, even when we have a 1, 2, 3, is because you've got to remember what the psychology of what is going on, right? People wait impatiently. People patiently wait impatiently. I'll probably not phrase that right, but what I mean by that is that the longer people have to wait. So with these larger structures, okay, if this was a small structure on the 1 hour, on the, a tiny little structure, like something like this, for example, okay, people can patiently wait. Let me just zoom in. I thought this would be quite interesting. People will more patiently wait for price to get to this area. Okay, get to this area because they haven't had to wait so long, right? But when price forms a massive structure like this, people have waited patiently in their mind for a long, long time. Okay, so the closer it gets, having waited so long, the closer it gets to an area like this, okay, the more likely they are to start FOMOing in, and then what you'll see is people will see it start to move here, and what they'll do is they'll go, oh, it's going without me, so it starts to move. They start to get short, and they go, oh, well, what I'll do is it's okay. I'll just put my stop loss above there. I'll be fine, right? And then the same thing happens again. It gets close. I've drawn it so it's tapped it this time, but it gets close again, and people go, oh, it's going without me. It'll be okay. I'll just stick my stop loss above there. and then it does that, and then commits, and then all of these people get washed out. So the bigger the structure, the more likely it is that these little ending structures, which we may be seeing now, take place, because of, the FOMO gets worse the longer people have had to wait. So, but regardless of that, that may not happen, and we have to be mindful of that. So if it doesn't happen, what are we looking for is a tap into the area of value. As I said, one of the reasons I prefer CAD Yen, aside from the fact that Swiss yen is not a pair that I would like to hold overnight, and especially not over the weekend, given that it's Friday as I speak. I nearly said type then. One of the reasons I also prefer CAD yen is because we kind of have a 1, 2, 3 leading into a hook point, whereas with Swiss yen we don't. But regardless, this is still a very clean structure. But what I'll be looking for is a tap into the area of value, push down, and then any kind of flag on the 5-minute or the 15-minute chart, and then I would look to get short on the break of the flag or within it. And this is another one which I would hold down to these areas, and I would use the mechanical management tool, measure from there to there, set the take profit there for something in the region of 16%, and trail my stop loss accordingly. Do I expect to get 16% on a trade? No, but there's a lot of scope with this one, so I would just manage it a bit more loosely. First inflection point being there, first little bit of consolidation, and that's what I'm going to be looking for today, folks. I hope you've enjoyed this video. We shall see what happens, and I shall bid you a great day, a great weekend, and I will see you again in the next video. Thank you very much indeed for watching.